Good morning and welcome to the Totally PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and they can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I would like to submit the following poll. And I would now like to hand you over to CEO Wendy Lawrence. Good morning to you.
Good morning, thank you Alex, and thank you to everybody who is attending today and taking the time to listen to our presentation. You've got myself and Lisa Barter, CFO of Totally. We will be doing a page turn on our presentation with some highlights, but I would like to start by giving you just some general messages that we'd like to give over at the beginning of the presentation. So we'll be talking to you about continued growth and our solid operational progress, and I will be going into details around that. I think the overall messaging is that, our market remains a difficult market, the worldwide pressures that are outside of our control, but it is our intention and our ability to remain as that partner of choice for the NHS as we work through all of those issues and to make sure that we continue to deliver. We have already done a number of presentations to investors over the last couple of days, so I have got a few themes which have been asked of us, so I think it's quite important for me to try and provide you with information as we go forward. So a lot of questions around the North West London contracts that we actually announced in January that we had walked away from. Just to clarify to everybody that we are now the other side of that. In our forecast going forward, there is no overhang from the North West London UTCs that we ended the contracts on. At the time, we said that we were in legal discussions with those. Those have now ended, and we're through that process and can confirm that we have walked away and that was absolutely the right thing to do for the business. You know that we will not operate onerous contracts, and what was being asked of us was above and beyond what should be expected. So we do know that at the moment we're in a temporary headwind, but we will grow, we will take our market share back. I need to reassure all investors that we are in a good position. We do not need to go back to the city to raise money at this particular time, so you'll see during the presentation the level of confidence and optimism that we have. So on the slide that you're seeing now, increasing demand across the whole of the healthcare sector, which means that our order book, if you like, is full and our services are in demand. What we need to do is to work alongside all of our commissioners to make sure that we can facilitate people getting into the right system at the right time and that we can get them through that system. We have a strong pipeline of new business across all areas of the business, both in urgent care and elective care. And I do have some slides further on in the presentation that I will share with you that shows the number of people waiting and what our response has been to that in terms of how we go on and support the NHS. So moving on to the next slide, operational highlights. I'm very pleased to say that all of our services that are registrable with the Care Quality Commission, our healthcare regulator, are rated as good. During the period that we're reporting, we've delivered services to it's just over, in fact, 2 million patients and treated 120,000 patients from elective waiting lists. We have restructured our healthcare services under one leadership team. There is a requirement for us to continually ensure that our business is fit for purpose. Since we acquired Pioneer and we brought that into the business, there was some duplication in roles, so it's up to us to make sure that roles and accountability structures are absolutely sound and in place. We've done that now, we're through that, and we are absolutely convinced that we've got the right people in the right roles to do that. We were the first and we remain the only provider to fully mobilise on NHS England's single virtual contact centre model, which is the 111 service, which gives NHS England full visibility on its platform to see our performance and, importantly, our capacity to be able to pick up any overspill on 111. Back in January, we announced a contract for the NHS 111 resilience provision, and we remain the partner of choice for that resilience work. And in fact, as 111 comes under more pressure, what happens is we're paid to actually pick up any 111 calls where other providers can't do so. So SBCC was and remains a very important investment for us. We also announced that we had retendered and secured and mobilised new 5-year contracts for the delivery of 2 urgent treatment centres in Bromley. We've actually worked in those urgent treatment centres since 2013, obviously over 10 years now, which is testament to the staff that actually work down there and the services that we provide. We have multiple new corporate wellbeing contracts, and whilst energy fitness professionals remains a small part of our business, it's very, very important to us as they move forward and secure more blue chip companies. And then we'll be looking at how we cross-sell those services. The other thing that we did earlier on in this year as a new mandated requirement from NHS England is that we attained our Cyber Essentials Plus accreditation for the way that we obviously work with data and data security. That's become more and more important for the NHS due to wars in other parts of the world and the potential risk from cyber attacks. So you can see that we've continued to invest internally in the business to make sure that it remains strong and is ready, and that we pick up that chalice of being that partner of choice with the NHS. That was a slide that we put together just in case you're not aware of the pressures that are on the NHS. I'm not going to dwell on it, but it was just that bit of, there are pressures that are outside of our control. We are controlling what's controllable to us, and we will continue to do so. So without further ado, I'm going to hand over to Lisa, who will take you through the financial highlights, and you'll be able to see some of the detail that sit behind the RNS.
Thanks, Wendy. Good morning, everyone. So summary of the year, growth in all areas, with of course the exception of cash consumption down from 15 million to 6.5. I've got a separate slide on that. I can go through that in more detail for you. So growth in all areas, in full year effect of Pioneer obviously drove part of that, both Pioneer acquisition and the EFP acquisition had a full year this year, so that amounts to about 12 million. But underlying our growth in the elective care area, and of course Wendy mentioned the restructure, we have structured our business now into urgent care and elective care. So elective care, many of you will be familiar with the planned care division we had previously, and our own startup company, Totally Healthcare, which was doing very well and growing rapidly even through the pandemic. So our underlying growth for that entire business, the elective business, is 21%. EFP, not to forget them, of course, a much smaller part of the business, turning over 1.7 million this year. Their run rate on acquisition was 1.2, so we've seen 40% growth in that part of the business as well. So lots to be proud of in terms of what we've achieved this year internally and how we've adapted to the challenges and the opportunities that have arisen as the NHS has found itself in some turmoil. Just moving on to cash, because I know this has been of some concern because we have consumed cash in the year. Some of you may remember at the interims we were at 7.4 million cash. So and the first half of the year looks very different to the second half of the year. What I've put on the slide here is where the cash went for the whole year, and you can see that we invested a lot of the cash, 5 million, and 2 million obviously went on dividends, 5 million on acquisitions and purchasing of assets. We established the SVCC, the Single Virtual Contact Centre, and we had to invest for Cyber Essentials Plus as well, and steadying ourselves ready for further growth. As Wendy said, and she'll go into a bit more, there is still significant opportunity. And there is no cash overhang from the North West London contracts. We've talked before about negative working capital for urgent care, which is very helpful when we get paid in the month for the month. But of course, with the electives, which is a growing part of our business, there is some consumption because we tend to get paid a month afterwards, which is obviously the opposite to what we get in urgent care. I think a thing to note is that whilst there is massive opportunity and we're going after that opportunity in elective care, the mobilisations of those elective agreements are generally about 2 weeks. So there is not a long mobilisation period that's going to consume working capital. And of course, we're capital light as well. So just going back to the first half of the year, we talked about, when we presented our interims, the fact that the cash had gone from 15.3 down to 7.4. We actually had increased our debt to about 6, as in our debtor balances, up by about 6 million. And this was driven by, if you recall, the backlog that we acquired through Pioneer. There's about 12-week backlog in billing, and just getting those processes and controls properly embedded. And Pioneer was a very innovative and a startup with a huge pipeline of work, and as that revenue increased, obviously we needed to stabilise. That was reversed in the second half of the year. So we are absolutely where we want to be in terms of our electives business and the controls around getting our invoices out, getting that cash collected, remembering, of course, that our customer is the NHS, and there were no bad debts. We collected all the cash, and actually the additional consideration paid was in regard to a holdback for the completion accounts as to whether all the debt would be collectible, as you would expect us to be thorough through the due diligence, and that debt was paid, so we paid it over to the vendors. So hopefully that gives some confidence in how well we've managed the cash during the year, despite the fact that there have been significant outflows for investment. As Wendy mentioned, North West London, there is no overhang from that. There was an outflow. You're aware that the downside of a negative working capital profile is that it will unwind, and these were significant contracts. So rebalancing the business, on hindsight, could have put FY24 on there actually, because what I'm trying to demonstrate here is how the business has changed and is growing. Some of you may recall that when we acquired both Vocare and Greenbrook, the margins of those businesses were around 12.5%. We've been through the pandemic. We've had, we've responded and supported the NHS, and we saw those margins go up to 19. We're pleased that they've settled at a fairly stable 17.5% within urgent care, which reflects some of the changes that we've made operationally. In elective care, we are steady at 20%, and this is where we're able to influence a bit more what work we choose and deliver for elective care, because the pipeline, it covers so many different specialties. We've got ourselves onto the Welsh framework, and there's a huge amount of waiting list work there as well. The statistics that we mostly have to support our view on the pipeline is mostly in England, but there is a lot of opportunity also in England and Wales, and those are higher margin. That's the insourcing and the outsourcing, of course. Different specialties, different margins. So there's lots of opportunity there. And corporate wellbeing, a great 41% margin, but of course a smaller part of the business. They're on track for 2 million. Their run rate's 2 million actually presently. So the mix has changed. We're moving away from what was a lower margin part of the business. In 111, in fact, is now we're doing the resilience work. We're getting higher margins than we would have had pre-pandemic. So from our point of view, it's very positive in terms of margin and increasing that margin. We're balancing the business now to have less urgent care, less reliance on urgent care, and more on elective care. So elective care, 26% of revenue in 2023, and that we're forecasting for that to be 35% of revenue going into FY24. So on that, the outlook for FY24, it was regretful that we were having to downgrade again, but we felt that this was the most sensible thing to do as we exited FY23 and looked at where we thought we had opportunity. So we have taken the urgent care forecast down to its current run rate. So that means that we have pretty stable and visible contracts throughout FY24 for urgent care, and we have assumed that 5% growth. We would normally assume 10% growth for urgent care. Our eyes are on that resilience work for 111 and the number of tenders that are out in the business as well, including urgent care. We're tendering for urgent care, urgent treatment centres as well. There's an all-party agreement, so that political risk between if we had a Labour government or a Conservative government or another, they've all signed up to an agreement that the independent sector is here to support the NHS and here to stay. And we have, I mentioned the pipeline in electives. We've assumed 20% growth for electives. We think we can achieve 50%, but again, we've been cautious. So the outer years, 25 and 26, we've just pushed those out to the right, whilst we use FY24 just to get stable and be cautious and hopefully overachieve given the amount of opportunity still in the market. So I'll hand back to Wendy now.
Thanks, Lisa. So talking a little bit more about the strategic progress on growth. For those of you who have attended our presentations before, this should be a familiar slide to you in terms of how we deliver and what we're doing going forward. I won't go through every line. The presentation will be available to you afterwards. I've already mentioned quite a lot about SVCC, the new 5-year contract for the urgent treatment centres in Bromley. And I've also mentioned the EFP, who continue to grow. CQC, all services are registered as good. That's a really important issue for us, because as long as we continue to provide excellent quality care, we will be considered as an excellent partner. We've changed the board slightly. We've appointed a medical director at board level. We now have John McMullen on the board. John was one of the founders of Pioneer, and recently retired from the NHS, but prior to that was a senior NHS consultant in spinal surgery. So John now works at a board level with Lisa and myself, and I'll talk to you a little bit more about the restructure shortly and the other people involved. So major IT programs bring systems together, delivering efficiencies. When you have a buy and build strategy, obviously every business you buy has a slightly different approach to IT, so that's been quite an interesting journey. But that was necessary to achieve Cyber Essentials Plus and make sure that we have that full accreditation. I will pick up the restructure again shortly. We have a continual recruitment exercise underway for NHS 111. Our resilience contract means that as long as we have people sitting on seats ready to answer those calls, that the work will come through. So it's in our interest to do that. And we're continuing to support the NHS with the development of postgraduate doctor training. We've invested in Pioneer, as Lisa has already said, so that it can actually grow strongly from its platform, and to make sure that all those opportunities for growth we can actually act upon. So if I move on, a little bit more about the refocused healthcare organisation. Again, through buy and build, you have different companies. We need to make sure that the accountability for delivery of service is really clear. So we've pulled together our elective care services and our urgent care services, led by one team of professionals. So on the left, they're there for you. So Prasad Godbol, who's the Chief Operating Officer, one of the founders of Pioneer, an entrepreneur in its classic sense, obviously very experienced in the delivery of healthcare. Prasad was a full-time NHS consultant in Sheffield. He's also a professor in Sheffield, again, recently retired to join us full-time. And I have to say, he's making a huge difference to this organisation. He is supported by Andy Gregory, who was the managing director of our urgent care business. Andy's got vast experience in the delivery of healthcare. Kat Dolby-Walsh, chief nurse in every sense of the word, if you were referring to it as NHS, but what Kat does in terms of leadership of nursing and quality shouldn't be underestimated. John Ferguson joined us. He is a new addition to Totally. Vast experience, worldwide international experience in the delivery of operational services of healthcare. And Barry, who leads our director of our business development, as director of business development. Barry actually came over to us on the acquisition of Vocare, and so understands the service as well. Just a little bit about the two strategic business units then. Totally urgent care, I think that's understood quite well. Delivery of all urgent care services from end to end, whether that be 111, urgent treatment centres, GP out of hours, and all the bits that fit in there in between. demand for those services continue. And totally elective care. We've brought together everything that is deemed elective. So that is all the way from insourcing, outsourcing, our AQP status, community dermatology, outpatient and therapists, so physiotherapy, podiatry. The demand for insourcing and outsourcing continues. I've got some slides on it. And again, we are now on the framework for those services for England, Wales, Northern Ireland and Republic of Ireland, where we are delivering services. Couple of the next slides I will skim over, but there's more information there for you. I think I've already spoken about SVCC, really important strategically for us, and the benefits of that are already being seen across the organisation. There is a huge tender out there at the moment as an opportunity for us on 111, and the fact that we are now fully mobilised on SVCC means that we are very well positioned for that contract. We go over to continue to support the development of new doctors. We actually support postgraduate training for doctors. They spend time working totally as part of their GP training so that they get hands-on experience. And obviously it's a good way of introducing them into our business models of delivery, which helps with our recruitment of doctors going forward, which I do have to say is not the problem for us that it is in other parts of the NHS. We've talked around protecting patient data. Obviously, it's really important for us. We need to provide that reassurance to the NHS that we know what we're doing and that we work in a responsible way. We were successful in our accreditation application for Cyber Essentials Plus, and that is now a mandated requirement for when you put in for new tenders across the NHS. Corporate wellbeing, we've mentioned EFP quite a few times, and although it's a small part of the business, we have great plans for EFP, led by two classy individuals who know how to grow businesses. They continue to work with blue chip clients. Across the period that we're reporting, they have opened new gyms for Adidas. They have expanded their services for EA Games and continue to work with the Ministry of Justice, Ministry of Defence, and also the Royal Mail have extended their contract again, who they've been working with for over 25 years. They've also got an app which we have enhanced over the period. We've added in the Les Mills classes for that, and for anyone that is a little bit of a gym bunny, you'll know that Les Mills is the leading worldwide provider of services and also underpins a lot of what David Lloyd do as well. So we are looking at now how we offer that to a wider range, and we will be offering that to our whole workforce so that we can actually develop that as a commercial model. Watch this space for more information. So the coming year, we will continue to contribute and influence to NHS England's strategy. We also do lobby government, of course, so that we are connected in there. We will continue to invest in our insourcing and outsourcing capabilities to make sure that we can create our capacity for further reductions in waiting lists. And we will develop models of care as we go forward and make sure that our infrastructure internally to totally is fit for purpose. We do remain proactive on buy and build, and there aren't any organisations out there at the moment that I'm keen to bring in, but never say never, and we'll see where we go. So we will continue to be that partner of choice, and I say that's underpinned by the resilience work that we're doing on 111 and the opportunities that's presenting us with, and continue to grow our infrastructure and capability. We've also got a cultural change programme underway now that we've realigned our business to a new structure. We will make sure that our culture is developed and staff are motivated and incentivised to deliver. Our Right First Time campaign across the organisation, we've got high expectations for making sure that our staff engagement remains high. We want the right people in the organisation, and we want them to be rewarded for that and want to work for us. We will maximise potential in the elective care market. I'm going to go on in a moment to how many people are waiting. And we will develop as we go forward and seek out new earnings enhancing acquisitions as they arise. So here's a little bit of the data for you to pore over, which I hope will be helpful to you. This is England only. NHS England publicise its waiting list regularly. the others not so often, but we do know that the trend is exactly the same whether you're in the Republic of Ireland, Ireland or Wales. And you'll see there one of the stats that shocked me when I was looking at this, that since the COVID-19 restrictions were eased, so relatively recently, waiting lists have continued to grow by 31%. Do actually think that's a reflection of some of the difficulties that the NHS are facing at the moment with regards to the morale of its own staff. And obviously every time there is strike action, more elective care is cancelled. It doesn't necessarily work against us, of course, but obviously that trend of continuing to rise is there. If I move on, we've got a little bit of data there for you for urgent and emergency care. And again, just to demonstrate to you what's happening out there, pre-pandemic, on average across England, 73% of all people presenting in A&E were seen within 4 hours. That's now down to circa 57%. And as people struggle to get appointments with their GPs, the pressure on A&E continues. So urgent treatment centres have a really important role to play here. There are tenders out there at the moment for new urgent treatment centres, and obviously, as you would expect, we're actually looking at those. So Totally provides that additional capacity where demand outstrips capacity. You've seen me say that many, many times. So during the reporting period, we saw circa 2 million patients, 1 million of those face-to-face in urgent treatment centres and GP out of hours. Over 1 million patients came to us via NHS 111. That is pre when we launched the resilience work, so that number will actually increase, which means that one call was answered every 36 seconds, just to give you some context around what we do. And we removed approximately 120,000 patients removed from elective care waiting lists. So the reassurance to you is that we are ready. We are seeing a little bit of inertia in the NHS. That's why they deal with everything else that they're dealing with, but the tenders are out there and we do expect the tap to be turned on shortly. So in summary, oh sorry, I've skipped a slide, that'll teach me. NHS 111 performance, you'll see there we've had to anonymise this because we're not allowed to put it into the public domain, but you will see the green where they are totally provided services. And this is showing you the percentage of calls abandoned within 60 seconds. So this is when patients, the telephone aren't answered within 60 seconds and the call is abandoned. You'll see we're at the top of there. Those smaller bars above us do tend to be ambulance services who also take 111 calls. They take a much smaller number of calls, and what happens is when 999 is busy, that trips over into resilience. So it's a little bit misleading, but as you can see, we're very pleased with our performance on 111. So prepared to respond to future opportunities. The NHS is in crisis, but we're not the NHS. We're there as a solution to assist the NHS and to provide them with capacity where demand outstrips capacity and to enable them to do what only they can do. Our business model is robust, it's tried and tested and it's delivered. However, as all businesses worldwide, we're not immune to external pressures. When the NHS returns to its priorities, we are ready and we will regain our market share. So thank you very much for your time today. We are seeing some questions coming in, so if you will give us a minute, we can actually have a look through those and come back to you.
That's great, Wendy and Lisa. Thank you very much indeed for your presentation this morning. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the top right corner of your screen. While the company take a few moments to review those questions submitted today, I would like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via our investor dashboard. And Wendy, Lisa, as you can see, we have received a number of questions throughout today's presentation. And if I may hand back to you and kindly ask you to read out the questions and give responses where appropriate to do so, and I'll pick up from you both at the end. Thank you.
Thank you very much, Alex. So if I go to the first question at the top, can Accord refer to inert tender activity in the NHS? It's not to your comment, but it seems really strange that tender activity should be slow given all the pressures on the NHS. Can you expand on this? What tends to happen when the priorities change within the NHS or they have to manage something a little bit different, the back office business service just slows down. It doesn't mean that it isn't a priority for them. It actually means that something else is going on. So you remember through the pandemic, we saw next to no tender activity as they were dealing with that. So tenders are out there, let me reassure you. And I have to say there is a 111 tender out there. It is in the public domain. It is absolutely huge, above anything that we would normally deal with. Alongside the tenders for urgent treatment centres, we also are seeing massive opportunities coming out of the framework agreements on elective care. They work in a different way. So when you're doing waiting list reduction, it isn't via tender. It is, as long as you are on the framework for agreement, hospitals contact you directly and ask you to do work for them. And as Lisa's already referred to, the mobilisation period for that is normally within 2 weeks of being accepted. So lots of opportunity out there. What we do, we go at the pace that we are allowed to go at, and as decisions are made, obviously we will update investors accordingly. There's another question on there, what elective services do you offer? I think I covered that on the slide, and I think your question came up before I did that, so hopefully I've already answered it. But in terms of elective services, waiting list reduction, outpatients, community services, dermatology, podiatry, physiotherapy. So anything that you require an appointment for falls into elective care. Where you don't get an appointment, that falls into urgent care. Your corporate broker Canaccord is forecasting for this year a 20% reduction in revenue and a halving of profit. Are they being unduly pessimistic? I do have to say, you know, all research notes out there are not our research notes. They have analysts that actually work those through. So, you know, we will continue to do what we do. And, you know, this is the first time we've sat in front of investors during my time at Totally, which is quite a long time now, and had to talk to you about downgrades. And we certainly don't want to be in that position again. So I think we have been cautious, but I think it would be the right thing to do. Another question, the first thing you say on Outlook is we remain acquisitive. How would I fund this? I think I also said that whilst we remain acquisitive, there is nothing in that pipeline at this time. However, if an opportunity came up and it would add to our ability to grow quickly, then as a board, we would discuss that and how we can do it. But I have already said that there is nothing in there that we're looking to do at the moment. Just reading down. Are you experiencing staff issues around availability of staff and inflationary costs? Yes, we are. I think everybody is, no matter whether you're in healthcare or elsewhere in business. We have a range of ways that we work with our workforce. So we have increased the number of people that are employed directly by us on PAYE. We also operate our own staff bank, which means that we have lots of people. I nearly said patients, I do apologise. We have lots of staff that sit with us on a staff bank, tend to be on 0 hours contract and looking for specific shifts. Obviously, that's our first port of call to go to when we need rotas filled. And we do have a reliance on agency, but the agency side of our business is well managed. We operate a system using a neutral vendor so that agencies don't play us off. But yes, we are impacted by that, and it is important that we continue to manage that well. And I think you will see that we have done that, and we will continue to do that by the systems and processes we've got on. We do receive inflationary uplifts from the NHS, but as you've seen at the moment, there are ongoing disputes. Last year we received, it was unprecedented actually, we received 3 inflationary uplifts from the NHS on the majority of our contracts. The contracts that applies to tends to be the big urgent care contracts. But yes, we do have some protection from that. Okay, I've got a really long question here, just let me. Okay, there is a question here that does refer to one of our larger shareholders. Obviously, I'm not going to answer that because that is very sensitive to the individual. However, one of the terms in there refers to us slashing the dividend. I think it's I know it's the responsibility of the board to make sure that we manage the business appropriately. We do intend to continue to pay a dividend, but it is also our responsibility to make sure that we manage our cash proactively. So dividend payments are still there. And you can't please all of the people all of the time. We also have a large number of investors who would prefer us not to pay a dividend at all. So I believe that we've made the right decision for the board, and I hope in time that you will agree with us on that. But as I say, we can't please all of the people all of the time. Okay, a question. Are you planning to tender work in Northern Ireland and more in the Republic of Ireland? Yes, we have worked and do work in both, and we plan to continue to do so. Will we be publishing our new governance structure, which must have changed given the restructure? Yes, all of our new structures will be published. As I'm sure you're aware, I can see the name of the person that's put this, so I think you are one of our internal people. But yes, that will be published along with all the other structures within the organisation. Has the board given any consideration to using some of the cash on hand for a share buyback to help support the share price, or do you have other actions? So there is a wide range of things that we as a board are required to do. We consider every aspect. You know, the share price remains a concern for all of us. You know, we're all shareholders, all of different levels, and you know, none of us like to see what's happened to the share price recently, and we're doing our utmost to actually stabilise that. Share buyback is something that we regularly consider when we feel that is the appropriate thing. We discuss these things with our advisors all of the time. You know that we've recently refreshed our Nomad and broker, so you will see that we have those conversations ongoing, and should that be something that we believe is the right thing to do, that is something that we will consider. What covenants are in place on your credit facility? That isn't something that I can put into the public domain. Obviously, we have an RCF in place with the bank. We have had that RCF in place for years. It was there to underpin our working capital requirements, and it remains in place to underpin our working capital requirements. And we do not believe that we will need to take on any more debt. But in terms of covenants, that's not something that I would be putting in the public domain.
They're not unusual, though. They're the covenants you would expect to see on a facility, and there's plenty of headroom on them. And we report to the bank every month, so I'm pretty comfortable if that's where the question's coming from. But
yeah, I'm also not sure. It's a follow-up question from the same person. What are the board of directors measured against, and who sets out and monitors it? Obviously, how a board is accountable to its investors. Our chairman remains very active within our organisation. Bob Holt is and will remain our chairman. And obviously, for anybody that works in this sector, know that Bob is all over us as directors in terms of making sure that we deliver and we're accountable for what we deliver. So we are monitored against the strategy that we set ourselves. And I can assure you that Bob is in regular contact with us daily, to make sure that not only we are confident in what we're doing, but we are supported as a board to do that.
That's great, Wendy and Lisa. I believe you have addressed all the questions for investors today, so thank you for being so generous with your time. And of course, the company will review all questions submitted today, and we will publish those responses on the Investor Meet Company platform. But before redirecting investors to provide you with their feedback, which I know is particularly important to the company, Wendy, could I please ask you for a few closing comments?
Yes, thank you. Just thank you again for taking the time to attend today, and I do hope that we've been able to provide you with reassurances. The headline messages from us is, yes, our major commissioner, you read about it every day, we are ready. We have always been ready, and we remain in that position to be that partner of choice and to provide the capacity that the NHS needs under its unprecedented demand. We will take back our market share. The number of opportunities available to us are vast. I've already referred to a couple of those, and one of those in particular is huge. I know I've said it before. We believe that, you know, we didn't want to downgrade, but it is necessary for us to do that and to be transparent in what we do. But we will regain our market share, and we are strong. So Please understand where we are. We are not coming back to the market for a fundraise. We do not intend to do that. It is not on the agenda at the moment. So I do hope that you've taken some reassurance from that. And thank you again for your time today.
Wendy, Lisa, thank you once again for updating investors today. Could I please ask investors not to close this session, as you will now be automatically redirected to provide your feedback in order that the board can better understand your views and expectations. This will only take a few moments to complete and I'm sure will be greatly valued by the company. On behalf of the management team of Totally PLC, we would like to thank you for attending today's presentation, and good afternoon to you all.